in a large sense, Web 2 already had a currency. It was domains, right? And you could even expand that out into perhaps YouTube account domains, YouTube account handles, and Twitter handles, and things like that. It was cryptocurrency, maybe 2.0 in some sense. So fast forward to now, you have Bitcoin, which is the new gold, and then I think what you have with cryptocurrencies is they're all really vying for use case. There's a lot of projects like EOS comes to mind, right? A very, very big project. I believe it was in the top 10 in the last bull market. Where is it today? It's nowhere, right? It got bursted in that bear market bubble that does occur in the 4-year cycles.
Hi everyone. So today we have an esteemed guest. Can you introduce yourself?
Yeah, so I'm Shrum, and I am on the Investing Bros. My partner is Tim, and we go live 9 a.m. Eastern Standard Time and 3 p.m. Eastern Standard Time, and 11 a.m. You guessed it, Eastern Standard Time on Saturdays. So hopefully, if you're listening to the sound of my voice, you'll join us for those live shows on Investing Bros on YouTube.
Perfect. So how did you get into crypto?
Yeah, so I've been trading stocks since I was in high school. So 2013 when I started trading American equities, U.S. equities like Microsoft and Google and things like that. And since then, I also got into media production, and so I did a lot of podcast production like we're doing now for clients. And those two skill sets of stock trading and media production really converged, and I had the opportunity to apply to a position at a crypto YouTube channel here where I'm actually from in North Florida, USA. And so from there, I got exposed obviously to crypto pretty heavily. According to my Robinhood account, I had been trading Bitcoin as far back as 2020, but I wasn't. I can tell you, I was not of the mind that Bitcoin was going to be anything. I was still very, into stocks. But then fast forward, I got hired at this YouTube channel that covers nothing but crypto. And obviously, my mind was changed quite heavily as I quickly understood what it was crypto meant to the world.
So would you say that right now you are like a Bitcoiner or like in general interested in the whole crypto space?
I'm definitely interested in the whole crypto space, but I sympathize with a lot of Bitcoin Maxi's points. The way that I look at it is that Bitcoin is the new gold. It is a gold. And, actually, website domains are a big part that people leave out of crypto. But I believe that website domains were kind of the original commodity, commodity, because you've been able to buy and sell important, valuable domains like google.com, amazon.com, or pets.com, right, for a long time. And so in a large sense, Web 2 already had a currency. It was domains, right? And you could even expand that out into perhaps YouTube account domains, YouTube account handles, and Twitter handles, and things like that. There was exclusivity and there was scarcity. A lot of that was brought around by large tech companies like Google and Twitter and Facebook and things like that. So it's definitely different than crypto. It's not on a blockchain, right? But it was cryptocurrency, maybe 2.0 in some sense. So fast forward to now, you have Bitcoin, which is the new gold, and then I think what you have with cryptocurrencies is they're all really vying for use case outside of store of value. Now, some of them will be a store of value like Bitcoin, but really, crypto, meaning not Bitcoin, all the altcoins, in my view, are really just the .com bubble, Web 2.0 all over again, except it's Web 3, right? And they're all kind of vying to be the next Amazon and Google and things like that in their respective categories, their respective narratives, their respective Web3 verticals, if you will.
So you mentioned the dot-com bubble. So you think that we are like maybe in a bubble because like we have tens of thousands of projects. So you think some of this will blow over or it will continue to expand?
So there's a general consensus among, you know, the wiser crypto investors, you might say, more experienced crypto investors, that as much as 99% of cryptos will eventually go to zero. So that would obviously not include Bitcoin, and it probably wouldn't include, you know, maybe 20 of the current top 200 cryptos that exist. Now, that estimation could either be wrong, right, or it could be just wildly inaccurate, and it's going to be that it's much more like maybe 50% of the cryptos exist. Or it could be wrong in the sense that all cryptos no longer exist except Bitcoin, or no longer do any cryptos exist, including Bitcoin. So those are the only outcomes that I can see. I think the one that is most likely is that Bitcoin will be and is kind of the new best store of value, right up there with gold and real estate, and U.S. stocks, right? When it comes to crypto, the crypto side, I think that a lot of them are going to get wiped out in the next 50 years. There will also be new cryptos, right, that will emerge, that will have learned, the teams that create those will have learned from the mistakes of Ethereum, Cardano, HBAR, Caspa, kind of bringing it into the future. And so there's some cryptos, there's some projects, there's even some probably blockchain adjacent technologies like hash graphs and block DAGs that haven't been invented yet that will be and will be revolutionary. And we just don't know what the names are. We might know some of the founders already that are going to create those projects. But yes, to answer your original question, I think that a lot of cryptos that are on the market cap lists today will be wiped out. And that's not that I want them to be. I'm invested in a lot of them, right? But just the nature of a bubble, which I do believe that we're in a bubble, but it's far from over, and it's far from ready to be popped.
So if I remember correctly, when I read about the dot-com bubble, there was like the whole stock market, let's say market cap, bloated. It's like it went down a lot. So not just like some companies, even Amazon itself, like it's a quality project, let's say, in the Web 2.0, but it went down a lot. So would you guess that maybe this bubble when it blows over is just only these cycles, like because we have like almost like the 4-year cycle? Or is it going to be like something maybe permanent? And also, is it going to affect the whole market cap for the whole space, or maybe just like let's say 50% or 99%, depends on the perspective of cryptos. So what do you think about it?
Good question. I think that it would absolutely affect the overall market cap of crypto. And then to answer, and that's a easy answer. Yes, it would. If a bubble was to pop in crypto, it would definitely affect the overall market cap. When it comes to the first part of your question, I think it's a little bit more nuanced, right? Is we don't exactly know which cryptos are going to survive and which aren't. There's some today that are surviving on branding alone, right? There's some that come to mind. Memes, meme coins are literally surviving on brand alone, unless they're, giving some kind of promise of utility in the future. But those certainly are cryptos that have a market cap. Some in some cases, multiple billions of market cap. But I think by definition, those are kind of prone to be a bubble, right? Unless the future pans out to where a meme in and of itself is valuable in the same way that a baseball card is valuable. It doesn't have any intrinsic value. You could use it to maybe keep a door open or something. Might have some utility in some sense. But a meme coin, right, is in some sense kind of baked into the bubble system. Now, what I would say is what is clear to me is that there is a crypto bubble, right? What is unclear is the timeline and the scale of that bubble. The dot-com bubble, it obviously initiated with the inception of the internet, right? But it wasn't until the early 2000s and into 2011, I believe, is when the dot-com bubble actually burst, right? So it took several decades for the technology of the internet and use cases to be spun up on that, and then there was a bubble. What happens in investing is that there's a lot of investors that are wrong, right? But they still want to make money. And so investors that are wrong are going out and making claims about projects, and that in this case be Web 2 projects, competitors to Amazon like AOL, different things like this. So investors that are wrong are going out and saying, "Hey, AOL is going to be really, really big, multi-hundred-billion-dollar company in the future," right? And then a bunch of other people who are wrong and less educated believe that person who is wrong. The people running the organization, let's continue to use the AOL example, they kind of hear what the investors are looking for with the investor class, and then trends begin, because you'd say, well, how can we cater to this investor class that may be wrong, but are still willing to part with their dollars and invest in our company? We can take those dollars and develop our company in the vision of what the collective consensus wants. either out of a use case or out of promise for a use case. So you have that kind of an environment. Now you also have investors that are right, and that fully understand what the internet is, what the value of the internet is, and what it is likely to do, and how impactful it's going to be. And that's a small, I would say, a minority of investors at the beginning of any major technology, right? So in the same way, you fast forward or copy paste that same phenomenon for Web3, you have to assume that as many companies as there were in the dot-com bubble, by percentage, are going to be wiped out. Now, you mentioned Amazon, and yes, Amazon and other Web2 companies got caught up in the bubble popping, right? And they got corrected. Now, those smart investors, the investors that are right, not wrong, the investors that truly understand the value of the internet and how it works and what its limitations are, they invested in Amazon. They bought it low. They bought the dip, right? And they were rewarded for that. When you're smart and when you're right, you get rewarded. When you're dumb and uneducated, and when you're wrong, you lose. And sometimes you lose money, and sometimes you lose all of your money. If you're dumb, wrong, and irresponsible, and a bad risk manager. So you don't want to be those things. And Investing Bros, that's our main core reason for existing, is we don't really try to tell you what to invest in, because it's anybody's game, right? We don't know if we're the guys who are wrong, or if we're the guys that are right. We like to think that we're the guys that are right, but who's to say, right? We won't know until the bubble bursts. So ultimately, that's kind of the way that we think about it. And on Investing Bros, we try to give you a level-headed and very wise understanding, and very objective point of view, not trying to get too close. Now we do have investments. We've deployed our own capital into certain projects, and we believe in those projects, but there's a good chance that we're wrong, right? So we'll see. But that's the way that we kind of approach it. Again, when it comes to Bitcoin, I truly believe that Bitcoin is pretty much, it's not relevant in everything I just said. Bitcoin is different from Web3. It's different from crypto. It's different, and I think it's likely to be completely immune to the bubble phenomenon that could happen. Now, it could have a correction because there's lots of uneducated investors that associate, the eventual bubble popping in crypto with Bitcoin, and that will be a mistake. And people who buy that dip will be rewarded, in my opinion, right? But that's something that I have much more conviction in, that truth, and Bitcoin as an asset. That is something I have much more conviction in than any of the altcoins that I hold.
So I see that
this episode is sponsored by DegreeSign.
CoinExams platform was purpose-built by DegreeSign to be one of the best-performing platforms in the crypto space.
DegreeSign is an agency developing web products with a long experience of building products from scratch for maximum performance and stability.
Start today. Just email make@degreesign.com.
you mentioned like the bubble as we spoke about it. But I still want to know, like, when you say bubble, do you mean this 4-year cycles? Or do you mean like maybe since the inception of Bitcoin, like over the last 12 years, we're still in the same bubble and it hasn't bursted yet? What's your
So
view?
it's both. So there's a macro bubble, right? That for Web 2, it kind of took probably like 2.5 decades to develop into a full frothy bubble for that to then be popped, and for in certain investors and entire funds to completely lose their lunch. Right. I think that we have both, though, because within the 4-year cycles, so you're referring to the Bitcoin halving that's largely kind of controlled and timed out by the Bitcoin halving. Those 4-year cycles are also little mini boom and bust cycles, right? And so you think of there's a lot of projects like EOS comes to mind, right? A very, very big project. I believe was in the top 10 in the last bull market. Where is it today? It's nowhere, right? It got bursted in that bear market bubble that does occur in the 4-year cycles. So the answer is it's both. And these 4-year cycles, I don't know if Satoshi intended this when he created what he created, but they're very good. They're very healthy, these 4-year cycles, because they let me just say it like this. If the 4-year cycles didn't exist, FTX would probably still be around, right? And other scams in crypto would have had more of a chance of continuing to develop and scamming more and more people. So the bear markets provide a natural filter for bad ideas to die, and for good ideas that actually have the potential to provide real value for those to thrive. And Ethereum seems to be the shining star of that. Though it has high gas fees, people are still willing to pay those fees because implicitly they see value in that product and the value that Ethereum provides to the market. So it's both. It's happening in those cycles, and then it's. But I think that there's a bigger bubble to burst eventually, and maybe it won't be as dramatic as the Web 2 bubble. Judging from everything I've seen in crypto, it probably will be as dramatic.
So how about for you mentioned also the stocks that you already have maybe some experience trading stocks. So what do you see like, because we have seen like a lot of correlation, or maybe there is like, it doesn't have to be like moving together, but maybe sometimes there is some relation between the stock movements overall and the crypto movement. Like let's say, for example, when there is like some inflation in the dollar itself, then maybe both of them will go up. So do you see that this relation continuing, like this correlation, or is they going to decouple at some point?
So we actually just talked about this with one of our guests on Investing Bros, Caleb Franzen, and we've actually instituted him now as a mainstay on the Wednesday shows at 3 p.m. Eastern Standard Time. So this is something that we've answered recently, and it's something that we really ask the question a lot in the bear market when there's a lot of time, there's a lot of quiet. Right now in the bull market, which we're recording this March 14th, 2024. Everybody's excited about making money. People aren't thinking too much about the correlation with the stock market because in these moments, these lead up to the halving, it does have a very, very loose correlation to the stock market because the stock market is going to be doing its thing. Right now, the biggest narratives in the equities markets is going to be, new major product releases from Apple, the Apple Vision Pro, whether or not that's going to succeed. And then that would be a minor note to the major note in the markets, which are AI, right? And NVIDIA is by far stealing the show, right? And that has been stealing the show to the upside, luckily for the stock market. But there is a growing worry that the top 7 tech companies are ultimately unsustainable, or those companies themselves are going to do very well, but it's unsustainable to think that the rest of the stock market is going to do as well. And so there could be a reckoning, not necessarily for those top 9 companies. And when you and probably another 400 or 500 other companies as well are going to do very well. But it's not clear that the rest of the stock market will be able to be sustainable over the next 25 years. And there's a lot of debt, there's a lot of zombie companies and a lot of zombie brands that aren't really actually making a profit on the goods and services they sell, but because of the cheapness of money, still, even at 5.5% interest rates from the Fed, they're still able to soldier on. But right, and so that is, I think that there probably will be a correlation, a non-zero correlation forever, just because what the nature of maybe not forever, but for as long as crypto is not an assumed just kind of in the background system, like we think about the internet, right? We just take it for granted, like fiber optic cables and things like that. Once crypto hits that phase where all of the nerds have figured it out, all of the projects have been implemented, and there's just small incremental improvements, then it probably decouples from the stock market. But what the crypto market is right now is the same thing as the stock market. It's just people betting on ideas. People saying, hey, this idea is better than this idea, or this leader is better than this leader at implementing essentially the same idea, right? There's millions of different ways to sell products, and there's companies that can help you sell products. And then there's the products themselves and the people who make those products. And so anyway, on the Web3 side, I really do see the same types of phenomena impacting the prices of coins because of liquidity in the market, right? And so investors that are straddling both markets in crypto and U.S. equities or foreign equities, because there's a lot of international investors into crypto. As long as central banks are continuing to have relatively loose monetary policy, then you should continue to see prices go up and to the right as speculation continues to thrive and folks want to deploy more and more capital to be able to make a return on that. Now, if the flip switches and central banks it becomes popular for whatever reason to start to restrict liquidity, then you're going to see assets come down. And I don't think that, again, outside of these like extreme moments in the 4-year cycle where there's very predictable bullish movements or very predictable bearish movements, outside of those moments, I think that you're going to see a pretty strong correlation between the NASDAQ, specifically US equity index, and cryptocurrencies in the top 300, right? Generally, and certainly Bitcoin and Ethereum. So I don't see that correlation going away, again, the moment we're in right now is unique and there is a decoupling. Yeah, in general, it should theoretically be the same because both are just the stock market and the crypto markets are just filters for ideas, and it's a market for ideas to be tested against investors' fear and greed.